30 points still, so 18,035 is where we are at. Sandeep Shah is Associate Director at Motilal Oswal Private Wealth Management. He's joining us right now on the show. Sandeep, it's been a while since we chatted. Great to have you with us here on the channel. Let me at the outset wish you, your team, your family a happy new year. For the market, it indeed has been a happy new year. I mean, at least a very happy start. Gains upon gains, day upon day. What is your way of thinking as we start this new year? We're still in the initial few days. We've had 18 to 20 months of very strong markets, up and up. Is that likely to continue? Your sense?
Thanks, Prashant. Nice to be back, and wishing everybody also watching and the team at CNBC a happy new year. This is hopefully just the first phase of the bull market, right? And the first phase of the bull market does tend to be a little sharp and takes most people unawares. The good news is that bulk of the price action has also been demonstrated by increase in earnings. And we've seen a huge increase. If you look at the profit pool of the top 1,000 companies, we've seen that profits have actually grown significantly, and the bulk of the price rise is actually explained for that. And of course, there is some amount of re-rating as well. I think there are so many secular growth drivers which are actually driving the economy and therefore markets as well. Whether it's the K-shaped curve, which means that the bigger and the better companies, the nimbler companies, the more agile companies are doing much better. They're gaining market share, even as there is demand clawback, even as there is a demand growth which is happening. Of course, this also means that there is a section of the economy which is not doing as well, which is actually things are getting worse. The lower sections of the society and the economy, including the rural sector. But I think that as the economic growth gains momentum, they will also actually bounce back maybe sometime next year. I wouldn't be surprised, given that we've already seen a 12% correction because of the fears of the third wave and the supply side issues and interest rate concerns. I think that the markets are actually likely headed higher, and I wouldn't be surprised if we see a new high in the first quarter. And the way things are going, it could happen pre-budget as well. Given that last year around, we saw a very good budget, while a lot of us would like to undermine the importance of the budget, in economic terms, but the market always does look forward to it. And we had a very good budget actually last time as well. So there is hope that the government will actually build on this, whether through the budget or otherwise. Frankly, to me, makes no difference, right? Or shouldn't to any long-term investor. But these factors plus the China plus one, which is a very solid theory, and I think the PLI scheme is something that I think, in some sense, you could say that no praise is good enough for it, because I think this is really going to lead to a significant manufacturing revival in the economy. And this is at a time when corporate balance sheets are quite lean. Most companies have actually, last year was a great year for corporate cash flow. In a pandemic year, most of them actually paid down debt, which also, of course, reflects in the lower credit growth that we're seeing. But that also, I think, is that should change slowly over a period of time. So I'm quite positive on the markets, but of course, not the time to get carried away. Given that markets have rallied, you want to perhaps stagger your purchases by 50% now, stagger the rest over the next 3 to 6 months. But yes, positive on markets.
Okay, all right. Positive on markets, buy 50% now, keep the remaining 50% to buy in the next 3 to around 6 months. Or you're sounding fairly optimistic, Sandeep, on the markets, as well as I noted that point that fresh all-time high as well could be even before the budget, and now it appears we're only 500 points or so away. Now, if you're going to be allocating 50% of the corpus, where does that money go? At these valuations, what's looking good?
So, continue to remain positive on IT. I think cement has had, last couple of quarters haven't been too good. But if you're looking for an economic revival, I think that should bounce back. And just want to spend a little time on, how IT could play out. IT is now about 8-9% of, GDP. And I think that could actually go up dramatically over the next 4 or 5 years, and it could add about $150 billion worth of to India's GDP over the next 4 to 5 years, and with a resultant impact on real estate, on building materials, on consumer durables, possibly on consumer lending as well. We already see that commercial real estate, IT is already buys about 50% of the space there incrementally. About a quarter of residential real estate is bought by IT employees. So I think that's really a big, huge move. And it's not just restricted to IT there. So I think that's going to be a great play. And real estate, is a very significant and important part of the economy. And even though there may be fewer companies that are capital efficient, given the nature of the business, but corporate governance standards have improved dramatically. And I think that real estate could be another very interesting space. I think we are headed for a capex revival from that perspective. Capital goods should also do very well. But of course, you've got to be specific here. I think lending will, some of the credit growth will bounce back but maybe slowly, but it's going to bounce back. So, the large private sector banks, the largest PSU banks, some large NBFCs, financialization of savings as a theme is only going to gain momentum. So whether it's the capital market related businesses, insurance, and yes, you have to own some internet businesses. While it's not clear, which are going to be the real big winners, and while there are concerns about how to value these, but I think you have to have about 5 to 10% of your portfolio in some of these internet plays. Perhaps the best way to play it is to buy 5 to 10 of them. Buy the best ones, buy the biggest ones, and of course, coming from that thing, of course, also consumer discretionary. So these are some themes which I think should play out well over the next few years.
Okay, Sandeep, hi, good afternoon. What about auto names? You didn't mention them. Two-wheeler, four-wheeler, commercial vehicles. We've seen a good bounce back in some of the names. Of course, there are a lot of names still close to 52-week lows, but there's been a decent bounce back in names like Eicher Motors, for example, Mahindra, Maruti. Anyone that stands out for you?
So autos, I think, is again something that I'm hoping that, so let's look at it, right? The two-wheelers and tractors primarily have been hurt by demand. Maybe the higher-end two-wheelers have been hit more by the semiconductors. Maybe you could argue that cars and bikes and the higher-end bikes have been hit more by the semiconductor shortage. So to that extent, yes, I think you could be looking to make a case to buy autos over the next couple of quarters. The point is there's no real rush to wade in here. Certainly not in the two-wheeler players, which have significant amount of sales coming from the lower end segment of the market, where we need to see a revival in the rural sector as well as the bottom of the pyramid in terms of society. Really, the economic growth spilling over and benefiting and cascading down. And I think that could take at least a couple of quarters. But the semiconductor shortage, we could hope gets sorted out in the next couple of quarters itself. So yes, you could look at autos as well, because no consumer story can suffice in a developing country without autos participating. But there will be play, there will be dips to buy in, and there is no rush. So you could accumulate ever so slowly.
All right, Sandeep, thanks so much for stopping by and filling us in with your quick take on the index, the allocation strategy, as well as sectors that you're fairly bullish on. Wishing you a good 2022 ahead. By the way, just pull up the intraday chart of Adani Enterprises.